Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. The question bar is open, folks. If ever you have any questions, feel free to ask them. It will be my pleasure to answer your question. Today on the markets, we have the pursuit of yesterday's rally. However, if we take a look at the situation here, all sectors are contributing to the increase. The Nasdaq, we're making an all-time high. And the Nasdaq, what's happening though is that we have a lot of stocks in the healthcare, technology sector, which is surging, such as Abbott Laboratories, which is clearly making a clear breakout. Other stocks like Cardinal Health are pursuing their rally. And elsewhere, Merck is having an important rebound. Same thing for Medtronic, and Stryker could break out higher than 97.26. So the Nasdaq is only an exception because of technology and healthcare stocks. For the Dow Jones, though, we're just testing this resistance. The fact that we're testing this resistance doesn't mean that we should actually close all of our short positions. Not at all, because the scenario that we laid out in the last few days, also on MarketGurus.tv and on the show, is that we believe that the American markets, mostly the SPY, that's the one that we're looking for, could actually come and retest this resistance around 212, 213, and then go back down again. We believe that the scenario of October is likely to happen. The only situation where we're going to be in a situation to buy back all of our short positions, close them totally, that's only and only if the SPY could actually go above 214 points. As long as it doesn't go above that, there's no need to be in a rush to close all of our short positions, because we believe that this scenario of October could happen. We rose, we retested that top, and then we had another sell-off. The fact that we're going up today is explained first of all by what the Fed said yesterday. Basically what they said is that they said that the rate hike in 2015 and 2016 is going to be done at a slower pace, which means that investors see that the Fed still have an accommodative tone, which is a good thing because we're going to keep interest rate unchanged, and the Fed did keep interest rate unchanged. Now, the fact that they keep interest rate unchanged, the fact that they say that they're going to raise interest rate but at a slower pace, all those is adding to the upward momentum on the markets. And we just saw on the Twitter from one of followers there that seems to be a rumor that the IMF and Greece came up with an agreement and they will extend the aid until the end of the year. So that's the news. It's nothing official yet. We're trying to make, we have not published the news on Gurus.tv. It's only some rumors that we saw in our Twitter feed. So we want to actually see if it's actually official right now. So those are actually the two factors that are helping to fuel the momentum on the American markets. Concerning the TSX situation, the TSX situation is a situation where we remain totally flat, totally neutral. The sector that is helping the TSX is gold. Why gold? Simply because if ever the Fed has more of an accommodative tone, will keep interest rate unchanged, well, this is all something that's going to be positive for gold, because inflation is going to come back up eventually. And this is actually helping gold to go back up. Now for the gold stocks though, so far we're still within this downward corridor. So just like the energy sector, when we did an attempt to reverse this downward trend, which failed, this is the same situation too as well that might happen on your gold stocks. So on today's increase in the gold sector, are there some opportunities to day trading? There have been some. For instance, Yamana Gold, which rose slightly, but since then has not performed well, so it was a flop. But there are also other stocks that, for instance, could break out, such as Benro Corp. But so far, those stocks are all neutral. So I think that for the gold sector, to be in a situation where you might consider to open some positions on the gold stocks, we need the gold sector to make a new high. It's not making it. The sector remains neutral, and it's a sector that's benefiting from the accommodative tone of the Fed, and this is why it's a sector that's helping the TSX to remain actually within its tight neutral range. Concerning the energy sector, it's a sector so far that remains weak, putting some pressure on its support. However, on the TSX though, we didn't have a lot of opportunities to short the sector because the sector remains neutral. But in the US, there's a big selling movement among energy stocks, especially oil and equipment. We have been quick on MarketGurus.tv that you can have access for free for 10 days to take some profits on our short positions that we had in the sector, which is Jones Energy. I said the question bar is open, folks. If ever you have any questions, feel free to ask them. So Jones Energy, it's a stock that we recommended on MarketGurus.tv here on May 28th. Right now, Jones Energy has pursued its decline. We made 5% since we have recommended that stock as a short. It has also tested a former support there, so we had to be quick to take some profit. I also said that we have a list of all the stocks that are breaking down in the oil and equipment sector. I'm not going to show you all the list. I'm going to show you some stocks out of that list. If you want the full list, make the free trial of MarketGurus.tv and you'll be able to have access to it. It has been released with the 1050 text and the analysis and advice section. So along this section here, if you take a look at MarketGurus.tv, so this is the analysis and advice section. So you just take a look at the 1030 show, click on that list here, and you'll be able to have access to it. Now, what are the stocks? Well, we have here Noble Corporation, which is clearly breaking down there. Now, Noble Corporation, the thing I don't like is that, look at the stochastics here, we're testing a bottom there, so that might be a point that might trigger a rebound. CGS Energy Services is way better because the downward trend is clearer and the break of that support is really clearer. Now, $11 could be a target on a stock like that. Weatherford is next in the line to potentially start a breakdown below $13.50. Ensco, a pretty nice breakdown there on that stock. Target $20, $20.45. So that there is some short potential on that stock, except it's oversold for the stochastics here. But there's some potential on the downside on a stock like that. The 10 is below the 30-day moving average. Histogram is still negative. Actually, we're making a new low, and the histogram is also lower than those ones here, which is which shows that there's no divergence on this bearish momentum there. 8wood Oceanogenics could be next in the line if it go below that support of 27.47. Hornbeck Offshore as well. So there are some breakdowns in that sector, and some could actually be next on the line. But is it a sector where you should be in a shorting spree today? Well, not in a shorting spree, but if ever we have markets that can go down during the day, well, then I think that might be a sector where you might potentially increase your exposure there. But this increase in the market, though, we think it's going to be short-lived. Yes, the TSX, the NASDAQ, the Dow Jones are all going up, the SPY as well. But don't be caught up, folks. Don't be caught up by this increase. We still believe that it's a phony increase. It's not a rally that will perform as long, and we need the SPY to go at least above 214 points to actually confirm that, okay, the situation has changed, investors are bullish, now let's close our short positions and start to buy the markets, buy long positions. So far, we think that to stay on the sideline is still a really great alternative on the markets. Now, as for the news that we have here today, folks, we have some news on the Kroger that actually released their earnings. The stock beat estimates, Rite Aid as well beat estimates. Jabal Circuit in line with estimates, but the stock has been punished. PR Imports in line with estimates, but the stock is confirming a clear breakdown. So you see it rose at opening and finally totally deflated. This is why buying stocks on earnings is really risky, though, because you tend to have those negative surprises for almost no reason. Oracle missed estimates, so the stock took a big hit. If you got into Oracle around this area or that area, now it's clearly a time to sell that stock because we broke an important support there, or at least reduce your position on Oracle. Because if you're looking at the yearly chart, well, you could be a little bit more patient, but really, if ever we have a new low tomorrow, that's definitely a stock I will get rid of. And elsewhere, we have some news here on CHAD. CHAD is a new ETF that will follow the the Shanghai Stock Exchange. And the Shanghai Stock Exchange today went down because they were not discouraged, but the fact that the Fed say that they're going to raise interest rate, the fact that there's a risk of a bubble in China, those factors actually weighing in, and this is why CHAD is actually going up by 2.88%, because it is an ETF that tracks the Shanghai Stock Exchange. And we know this ETF might continue to be liquid, though, because Shanghai right now, we had a merger, and there are more companies in the Shanghai Stock Exchange because they're connected with mainland China, and definitely we could see more volatility on CHAD, which is the new bearish ETF on the Shanghai Stock Exchange.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. We have one interesting questions from Andy. How can you tell if a stock is about to start a downtrend after it has been uptrending for several days? Well, I don't know if you mean by how can I predict if a stock is going to start a downtrend. This is something that we cannot really do because technical analysis is mostly looking at the graph and actually making an assessment after seeing the graph. So to predict if we're going to start a downward trend, that's actually something we can't do. But how can you say if a stock is in an upward trend? First of all, let's take a look at this stock here, Trends Canada. To confirm if a stock is in an upward trend, first, upward trend is if ever you could connect all the bottoms on that stock and you see that we're making higher bottoms, that is an upward trend. So an upward trend is consistent with a stock that has a higher bottom when you connect all the bottoms and a stock that has higher tops every time the stock is pursuing its rally. So from the beginning of 2015 until April, Trends Canada was within a clear upward trend. Now, where did the downward trend started? Well, since April, we see that we had a stabilization phase. We stayed flat. Now, how can you say if a stock is in a downward trend? Well, by connecting the top, see if the stock is making negative top or lower tops. So since after April, we see that TransCanada is within a downward trend because we had one top here, another one there, and another one there, and all of them were lower. So on an upward trend, it's all confirming if a stock can actually make higher bottom. And for a downward trend, is to see can the stock actually, by connecting the tops, do we have negative or lower tops along the way? Now, could we have predicted that TransCanada could start a downward trend around the month of April? Well, one thing we could look for is to take a look here at, for instance, the stochastics. And we see here on the stochastics and TransCanada around April, well, we were around here. And the wave of oversold situation is around there. So far, we see that at this point, we still had some room to go before we reached the oversold situation. So that there was a risk that this selling pressure could have accelerated to bring TransCanada lower. But could we have only relied on the stochastics to determine that TransCanada would start a downward trend? Not so much. So I hope I answered your question, Andy. I help you to identify an upward trend. A stock, when it makes higher bottoms, that's where you know it has an upward trend, and a downward trend when a stock has lower tops. However, you cannot use any indicator to predict if a stock is going to start an upward trend, because you also have to stay technical on a stock like that. Because on TransCanada, for instance, around the month of April, you know, around here, there could have been a wave of buyers that could have bring the stochastics higher, and the stochastics should have made a higher top, but it didn't. So there was a wave of sellers that came out. Finally, the stock went even lower and then confirmed and began a downward trend. But there's no way I can predict if a stock is going to start a downward trend. There's no indicators that I know of that can do that. So Tina, it's an interesting question that you asked, because it's a challenge that every trader faces. I face it. All of us here face it when we actually make some simulations on our trading platform for Trader Plus, which is a software that we have developed. So when a stock only moves a few cents each day, how are you supposed to trade it and make any money? Always get in too late, sell too soon, or the stock doesn't move enough to make anything. Thanks for your help. So I'm going to take a clear example there. I'm going to take an example such as Team Holding. TSU is our day trade of the day. Now, usually our theory is that you should get in when the stock is confirming a clear break of a sideways formation. So let's put less data on the stock like that. So let's identify first the sideways formation. So there was a sideways formation here because we had a resistance, we tested it and we went lower, and a support because we tested it and we went higher. Another slight sideways formation here, another slight sideways formation there, and also another one here. Now, when can you tell? As I said, usually we advise to get in whenever we have a clear break of a sideways formation on a stock. Now, could you have predicted that those breakouts would have performed well? I think you cannot predict that. One thing you could do is, first of all, look at the stochastics. One that I love to use is the 933 stochastics on the graph. So try to take a look at the 933 stochastics. So for instance, let's take a look at this first breakout. We broke out. What did the stochastic says? Stochastic says that there's still a wave of buyers that's coming in, but we're not yet overbought. So there's a probability that the stock will go higher. So that one performed well. Now, this breakout here, where were we? We broke out. However, look at how the stochastics was. Totally overbought. The stock went down after, so it's normal. Now, on this one here, it did pay off way better, because on this breakout, what we had with the stochastics, we had a stochastics that was tilting towards the overbought situation, so there was more room to go on the stochastics like that. So intraday wise, I think by looking at the stochastics is something that can help you. Also look at the volumes, other volumes also increasing when we have a breakout. Those are the two things. And on a daily basis, what you could take a look at is to see, okay, when the stock is breaking out, for instance, let's take a look at this one here, the one we had at 1721. So the stock broke out at 1721. Now, what are the targets? First, we see that you have a resistance that's there around 1750. So 1721, you're not 1750. There's a resistance that's there that also corresponds to the 100-day moving average in black. So this is a point where you might actually have a pause. So you have to say to yourself, okay, I'm getting at 1721. Intraday wise, that entry point at 1721 is nice because stochastics is heading towards the overbought situation. Volumes are increasing. Okay, it's a go. However, what's my potential on a daily basis? Look, I see at 1740, 1750, there's the 100-day moving average. So this is my potential. So is it worth it? So those are some questions you could ask yourself to avoid getting into some stocks where you don't have enough upward potential. First, take a look at the intraday chart, identify the sideways formation and the breakout of those sideways formation. Look at the stochastics, see if the stochastics is just leaving the oversold situation and has some room to go before we reach the overbought situation. And on a daily basis, take a look at the moving average or the resistance to see what are the targets on that stock after confirming an entry point on the intraday chart. So I hope I answered your question, Tina. That will eventually help you on your next tradings, on your next trade moves in the following days or weeks or months. So folks, overall, we have markets that are pursuing their rally. We believe it's going to be short-lived. We believe that as long as the SPY doesn't go above 213 points, it's not appropriate to close all your short positions. Gold is the most best performing sector in the TSX, but so far lacking momentum, lacking breakout, so it's not a sector I would invest in. I think it's better to stay on the sideline again today and not over increase your exposure. On the NASDAQ, a couple of exceptions here and there, but we cannot say it's a widespread sector movement where there's a lot of confidence that we have on those breakouts that we have on the NASDAQ. So I wish you all a good trading and see you tomorrow on the Swing Trading Show on DecisionPlus.com.